just investing in you, and really not just investing, but self-reflecting on how you are, how you're showing up each and every day is so powerful, and becoming a better you, and providing more value. And um, I couldn't recommend it enough, and be more passionate about that.
Invest in yourself. Well, that's what I did. If you noticed, and if you're watching this on Rumble or YouTube, I do have a different set of hair than in the video podcast. Well, my guest today is Mr. Kenneth Ameduri. He's an investor, and he's also the founder of CrusherStreet.com, and he is the chief editor of that website that they focus on trend analysis in the markets. But it's not just that we're talking about here in this podcast. I don't know if you're watching this on Rumble YouTube, maybe you'll see this, but if you're listening in the audio, I have in my hand here comic books of my two favorite superheroes. I got Iron Man and I got Superman. The Superman comic book is signed by Alex Ross. The Iron Man comic book is signed by Stan Lee. Both of these comic books I purchased, and I had them signed by both men, not only as an investment, but as a sentimental value to me. And I believe that as time goes on, these items are going to become very valuable. And we talk about this in our podcast today. And I'm hoping that you learn something from our conversation. I'm hoping to get Kenneth back in a future podcast episode. We could dive deeper into the markets, dive deeper into the art of investments, because investing is not just mathematics. People think that investment is all about calculating expenses, calculating cash flow. It's part of that, but you have to balance everything out. Everything in investment is an art, and Kenneth does a real great job of explaining that. And what he does is specializes on is trends analysis. So thank you for tuning in, and hope you give it a listen. Our guest today is chief editor and co-founder of CrushTheStreet.com. You could find that online. You see the sign is back, CrushTheStreet.com. It's a leading financial publication that focuses on education and trend analysis. He also founded the FMT Advisory, which is a financial management firm that manages millions in client funds. He is a market analyst, and I'd like to welcome Mr. Kenneth Ameduri to the Free Mike podcast.
Hello, Mike. Thanks for having me on. Looking forward to being here and chatting markets and entrepreneurship and just life in general.
Yeah, I'm really excited to get to meet you, because I would listen to some of the financial podcasts, and every now and then your name will pop up like in YouTube, and I listen to some. One of the most interesting ones was about artificial intelligence, and we'll probably get to that in a little bit. But looking back through my research, you started out with finance and business when you were really young. So tell us, how did you start out in finance?
Yeah. I'm so fascinated by just kind of what makes us who we are today. The things that we deal with, the things that we're into, the things that we struggle with, what makes us, go-getters, what makes us lazy. And I think there was just a combination of things that kind of came together, upbringing, parents, and just a general interest for the markets. And something that I will say is I've always I always had this knowing that when you build a business, that you build it greater than you. You build it to be a machine that operates beyond your input. Like you start to move the needle, and you're leveraging so much more of, whether it's other people's time or efforts and talents and patents and just real estate. And you start doing a lot more good out there, which is what business is. When you put more good out into the world, you give more than you receive, and you grow, right? That's business, that's entrepreneurship. And I can tell you, I was very grateful to start that at a young age. And time is one of those important things when it comes to entrepreneurs is you strike while the iron's hot. You do it early in the game. And, you'd be surprised. Like Tony Robbins has a quote that I love. He talks about most people overestimate what they can do in a year, but underestimate what they can do in a decade. And you realize, like, when you look back over the last 10 years, like how much you've done, how much you've changed in your how much you've grown, and it just so much can take place, but you got to get started. And now and so I started very young. My parents inspired me to save money, invest money. And I mean, I was selling candy in school when I was like in middle school and in high school. And I mean, I was running around with realtors during my high school years, just watching them sell real estate, and it's just all of this fascinated me. I knew I wanted to start a business, and once I can get that momentum going, I can make it grow from there rather than just tread water. And that was what kind of led me to what I do. I mean, I'm invested in real estate and stocks. I follow money trends. I'm in investor relations. I partner with different companies and get involved with early stage companies. And and we follow trends. That's one of the things we do.
That's fascinating. And did you focus primarily on finance and real estate when you started out, or did it just kind of did you just found your way there one day and you were like, you know what, I'm actually really good at this, and then
Yeah.
just take a dive.
I think real estate was just an easy, not easy, I guess easy for me to understand and a way for me to get exposure to business. But that was another thing that I had no preference in terms of business when I was younger. I knew I was in love with the idea of building the machine of a business. I didn't care if it was a tree trimming service or an investor relations company,
So
Coke
you're
bottling plant. Like I knew I wanted to build a business, or whether it's a real estate portfolio where I'm buying homes and fixing them up and people are renting and buying multiple ones. Like I loved the process, building the machine. And I mean, obviously it helps to have a passion for something and something you can get behind, because you can get miserable. But for me, I was always looking for, I guess the goal to have some financial freedom and freedom of my time, and to be able to do things I love, like golf or whatever, spend time with my family. So however I could figure that out, I guess it didn't matter to me. So I
it seems like,
really, for me, I really love the process, the building of a
yeah.
business. That's what attracted me. But a lot of people are creative, they're artistic, so they go down paths that they love. They become actors or musicians, and then becomes their business, and they build a business around their passion, which is fine too. But we all have different personalities. We all have different roads that lead us to where we're going.
It seems to me that you're really focused on building what was told to me, building value. You build a sort of value to kind of, and that's how it rewards you in return. And that's kind of a fascinating subject, and that's what it was. One of the things that was always instilled to me when I was younger. Also, you want some. The world doesn't owe you anything. My dad always told me you got to build it for yourself. And when you build it, they will come. And
Yeah.
I want to ask you, like, what is your advice, basically? There's a lot of young people out there right now who are looking into your portfolios or starting out their careers. How do they? How would they start off in this kind of market right now? Well, what do you see in the market at the moment? Do you think we're kind of in a bubble, or we're kind of, you think it's a good time to jump in?
Yeah. Well, I think any one given time is a rough time to go all in on anything. Whether 100% of your portfolio at any given time can be a very, very volatile experience, no matter when that is. I mean, 2018, getting into stocks and then dealing with the end and, watching your stocks pull back 20%, that could be a bit of a gut wrenching moment. But since 2018, markets have gone parabolic. And so, just having that diversified approach, I like, being invested a portion in the stock market. I like having precious metals. I think cryptocurrency is a great place to have some of your money. and real estate. But all of these things have gone up to a certain degree. So you have to be open to the fact that, hey, it might be time for a big pullback in these areas, especially in things like stocks and real estate and even crypto that have gone up so much in the last year, crazy amount. But and we can get into it if you like, but I tend to think that the dollar is what is getting devalued in this environment. When you have trillions of dollars getting printed, the government acting recklessly, businesses not operating, and the government printing money into oblivion, you have an issue with the fundamental value of that currency longer term. And so a hedge against that would be something, in my opinion, like gold and silver, or even companies that can charge more. If let's say the value of the dollar goes down, Coca-Cola needs to start charging more for their product than they did a year ago or 2 years ago. So that will get reflected in the stock price. Same thing with something like, fuel, or, Chevron and Exxon, oil companies. I mean, these are companies that have to charge more as things, as the dollar goes down. So, people think owning stocks is owning a dollar denominated asset, but that's not true. These are, in my opinion, hedges against inflation. And in a general sense, I believe being out of the dollar is our best bet going forward here. Because look what happened even in real estate over the last 10 years. They've printed money, they've kept interest rates really low, and they've done all these different things, and real estate and stocks have gone through the roof. Now, if you didn't own any of that during this time, now you have to buy at much higher prices. Now, maybe, we get to a point where, we see a big correction, a big crash, which is definitely on the table. But it's so hard to time that. But, and so they always talk about, the government and the wealthy, 1% of 1% making all the money. Why is that? That's because they own assets, and everything, the dollar is dropping in relation to those assets. When they send out these stimulus checks and, people spend their $1,000 at Nike, what do you think is going to happen to Nike stock? Yeah, those company representatives and CEOs and, just people in general who own, millions of dollars of stock, that's going to go up in value for them much more than $1,000 check will do any good for them. So yeah, it's a very nuanced thing. So in a general sense, you got to be out of dollars. That's my biggest general advice for people. You need to be in stock. I mean, shoot, own pieces of art or collectible cars if you know what you're doing. Obviously, that's something that you need to be specialized in. But I mean, we've seen even cars go up astronomically over the last few years. Art has gone up like crazy if you had the right pieces. So, I mean, it's,
Yeah.
in a general sense, you need to be out of dollars.
Yeah, as you can see behind me, I have I invested in an autograph of Stan Lee some years back, and my friends thought I was crazy, and I was like, "Oh, why are you trying to chase this old guy?" And now I have 3 of his signatures. But I thought that was pretty valuable because now, unfortunately, he has passed away, and that all those has increased in value. But other than that, the reason I was asking that is because when I was first looking for somebody who financial expert, we were inundated with the news with the Wall Street bets and the GameStop thing and this whole thing. It just kind of reminded me because a lot of these people who are going into like the stock market, and I would look at these forums, a lot of them are thinking, "Oh man, I'm going to ride the wave right now and go to the moon and cash out," and a lot of them did, but it really reminded me of 2007, 2008, when a lot of people were putting their money in real estate, and you mentioned real estate right now, and I'm based in Dallas. You're probably well aware this is a seller's market right now in Dallas Fort Worth. You could sell your house, at 50% of the value that you bought it 5 years ago, and you're not gonna be able to buy it again because people are gonna be, they can be putting a higher bid. What do you say?
Yeah. Well, and that's also a local area too. Texas is getting floods of people from places like California and New York, which have politics that are destroying the local economies. And so people are moving to areas that, they can afford and are a little freer. But, Texas is trending in a lot of those directions as well. Unfortunately, I mean, I live outside of Austin, and it's a homeless, nightmare down here with the politics that and it's becoming a vacuum, right? I mean, all the Dallas politicians they're sending their homeless people to Austin. Like, you guys take them. So, but anyways, yeah, enough said on that. It's just yeah. So what I meant by that is it's not just an overall nationwide thing. Texas is got a lot of things going for it because you have mass migrations out of states like California, which are causing prices to go through the roof here, which is absolutely incredible, on top of the devaluation of the currency. So, but I mean, it's a function of, the government sustaining things artificially. People aren't allowed to get evicted. They're sending checks so people can pay their rent. Maybe when they otherwise shouldn't be able to. So, that's keeping prices artificially high. And when you have prices moving in a certain direction, it creates more momentum because there's that fear of missing out. Now people are buying maybe when they otherwise wouldn't have, just because they don't know what's going to happen next month or the month after. So you have this almost artificial buying going on as well, because people are rushing to buy. They're overpaying. And that's what's happening in the stock market. That's what's happening in real estate. And you're right. How long can that all go on for? And I can tell you, in what we do, I mean, we have relationships with, hundreds of different YouTubers and people that do podcasts. And we're seeing almost everyone across the board see their viewership collapse with just stocks over the last few weeks, not even like, I'm not talking about a 6-month trend. I'm talking about 6 weeks. Absolute stocks flatline and their viewership has collapsed. People that were getting 15,000 views, some of their people may have lost some money in Tesla and ARK and some of these, EV company funds and whatnot. And they're down 30%, 25%. And the enthusiasm from the retail crowd, all these millennials that have been wanting to invest in the stock market, it's being sucked dry. And we haven't even seen a correction much in the stock market. It hasn't even, but we've seen in some of the hyped stocks, the ones that got everyone's attention, the one that sucked people in, the IPOs, the Airbnbs, we've seen these correct just a little. And the enthusiasm, the hype of the stock market has absolutely collapsed. And we're seeing that on the content side with a lot of the YouTube creators. Now, mainstream, it's fine. I mean, stocks are still up pretty big, but I mean, we're kind of seeing some of the signs of a turnaround here, which could potentially be on the horizon. I mean, we know eventually it's going to have to pull back big. I mean, we've seen the most historic bull market ever over the past 11 years, ever. And the end is always the blow off top. It always happens.
Yeah, I was just listening to Larry Kudlow actually right before you came on, and he was saying that it looks like we could be looking at the bull market kind of in the mainstream stocks. I do want to ask, though, how do you pick your winners and losers in this environment?
Yeah, well, it's one of those situations where you have to. I try not to chase what's hot, if you will. I mean, we were buying Bitcoin when it was hated. We owned Bitcoin when it was $800 in 2016, going into 2017. And, we wrote it, and then you have everyone asking you when Bitcoin is 15,000, how they can buy. Same thing now. When Bitcoin got to 50, people are like, well, I guess I should put 5% of my portfolio into crypto now. Like, you know what I mean? Like, this is the type of stuff that is realistically happening. People that said they hate it when it was 10,000, or they don't understand it. They think it's whatever. But then, when it's in the news every day and they're going, wow, I guess it is something. Yeah, sure. Now it's proven, but they've missed the boat. They would have been much better off having that opinion when it was much more in the hated news. And so, we try to pick things that are underloved. I mean, I think gold and silver right now Gold and silver at a higher low. I mean, it's not at a low. We've seen it come off its 2015 low of $1,000, gold specifically. But so it's come up, but it's down from $2,000. And gold should have a huge run here, in my opinion, especially as the dollar continues to fade. I mean, gold and silver are probably one of the most underloved things in the market right now. I think oil is another area. I think Exxon and Chevron, I mean, the dividends they're paying, you kind of got the Biden administration doing what they're doing. There was a lot of talk about electric vehicles, and that obviously took market share from oil, but I don't think oil's going anywhere. So I think that's an underloved portion of the market. And so that's what we do. We look for areas in which maybe seeing some misallocation of funds. They're not getting the love it needs, and that's what we try to allocate. And again, not to be completely missed trends. I mean, we rode the crypto boom. I mean, this has been a life-changing year for me, riding Bitcoin, over 50,000. Seeing what Ethereum's doing, and I mean, who knows? We could see Bitcoin go to 100 or 200,000. But again, now is not necessarily the time to be like, oh my gosh, I'm going all in because I think it's going to 1 million. I mean, we've got a massive move here. You got to be real careful in these type of environments and understand that asset classes that move like this can be extremely volatile. Let's say $10,000 is a solid number for somebody. If you put $10,000 in Bitcoin, you can easily see it go to $6,000 in a very short period of time, and you got to be able to stomach that. That's the hard part about these volatile sectors. I mean, that's why you diversify, and you gotta accept that there's going to be like casualties in the long term, and hold on for the long term and stick to your convictions.
Yeah, well, the market doesn't care about anybody's convictions, and it just is. I remember one of the proponents of gold. I don't know if you know him as Peter Schiff. I actually used to listen to him. Anyway,
I like Peter a lot, but he hates Bitcoin. And
yeah, that's what I was gonna say. Like I actually learned a lot from him back in the day, and I learned about how not to chase the crowd, basically. But I think completely missed the boat on the Bitcoin boom.
And it's not that I think he's. How should I put this? I think his concerns are fair, but you have to be open to the fact that there's going to be more buyers and sellers in something. And he missed the fact that it was going to be adopted the way it has been. You know what I mean? Like, okay, sure, Bitcoin could be duplicated. So in theory, is it finite? Well, not the Bitcoin itself is finite, but if you can have 1 million other competitors, in theory, it's not finite, right? It's not tangible like it is gold. But he missed the fact that this was a first mover, the network effect, the amount of people that are supporting the network. And it is what it is. Like, you keep talking about how it crashes from 50 or 60,000 to 50,000 and saying why that's not a store of value. Okay, well, yeah, I guess if you just heard of Bitcoin and you're look at that, but he's been saying that since Bitcoin was $100. Like, seriously, like you can't keep just talking about the crash from 100 to 90,000. You know what I mean? Like how disingenuous is that?
Yeah, I totally get it. I remember when Bitcoin was still $300, and that's when I bought in. Now look at it now.
For you.
Yeah, but that I sold when it was about 1,000. So
yeah,
but
it's hard. I mean, I look. I wish I would have bought a lot more at 10 and went into a coma. So, yeah.
What do you see as the future of of the economy here in the United States? I mean, we were talking about there's a lot of changes, a lot of policy changes right now with the Biden administration. Do you think right now the economy is going to go through a rough time, or is it prime for us to find some sort of opportunity in this kind of market?
Yeah, opportunities, absolutely. But I think there's definitely, I mean, if we're going to get it political or whatnot, I think politics tie into finance, but I think we're going to continue to see more and more tyrannical uh, aspects coming from our government. I mean, we're seeing that now, which is what the unthinkable happened with COVID and just what they've done to the entire world, locked them down. I mean, I'm not even comfortable getting on an airplane now to fly somewhere. I don't know if they're going to, arrest me when I get there and put me in some government hotel because whatever they
Talking
just
about
flew
those
from another
COVID
country and there
passports.
was news that someone had COVID there and here we go, I'm on an airplane and I was indirectly exposed. And I mean, who knows what can happen in this world? I mean, and it's crazy how we've gone down this rabbit hole now. And one thing that it's interesting how the elites, the government, what they do these things. As people become more dependent on the government, they make themselves more needed. The government becomes more needed. And, that's why we're going to have things like universal basic income. And we're already seeing that with these stimulus checks. It's not called that. And it's not like this perpetual indefinite thing, but that's what they're starting to propose. And, when people, they get these checks from the government, it's instant gratification. It's not, they don't understand. I mean, I think a lot of people do understand. They know it's not sustainable, but in the moment, they're like, all right, I'll take that check and go to Disney World, or whatever. I'll pay my rent with it, or it feels good to get this free money from the government. But they're not going to understand why they can't afford a house in 10 years. They don't have the same standard of living that their parents had, and why it's so expensive to do anything, because they literally are destroying the middle class in this country with the way that they're printing and spending money. And I think that's a trend. I mean, that's, what you're going to see is wealthy people own the majority of the houses. Like you're going to have these lower home ownership because it's just going to be out of reach for the average person to own a home. It's going to be owned by hedge funds and, big money. And they're going to keep, it's just going to be out of reach. And there's countries like that where you just don't own homes because it's just too expensive. Everybody rents and they're owned by the biggest money in the country. And that was not the case in the United States, but we're continuing to trend that direction. And so people have to be ready for that. And I don't think people are. People are still going to take the drug, the easy money, and the path of least resistance because, again, the long-term deferred gratification is hard. It's an uphill road. The path of least resistance is easy, and it's now. It's what can I get? Well, that's why. Again, not to get too political on your channel, but that's why the left tends to just to be easy to align with because they're so willing to give stuff out and open the borders, open this, open that. You're going to get money from us, and
Well,
that's why a lot of people align with that, without thinking about it. And it's an uphill battle to defer gratification and to build something sustainable over the long term.
well, those of us who kind of studied this kind of classically know, like, when we talk about left and right and all this
Yeah,
stuff,
yeah.
talk
Oh,
about,
I know.
yeah, and those of us who talk about, like, especially left-wing politics, these are the kind of people who kind of don't kind of want to do away with private property and all this stuff. I mean, so with what you're kind of describing, it's kind of, do you see it kind of trending that way where we're kind of losing property, kind of losing our hold on private property?
Yeah. Well, they're talking about a global tax, a global wealth tax. You know what I mean? And
Yeah.
so you're losing your property in that sense. Now, they start off a little bit, and they chip away at our freedoms. And start slow and it ramps up. I mean, one of the ways, and an example of this, an indirect example of this is look at the way the media has started censoring conservative thought, and they start off with the crazy guy. They start off with Alex Jones, who people just write off. Well, it's just Alex Jones. He says things that are crazy. He gets angry. But then they went down the line and now they started to censor the White House press secretary. And the New York Post, very mainstream, but they started doing it, and they went down YouTube channels, alt-right YouTube channels, and
Well,
stuff
recently
that people say that again.
Recently Facebook, I think, actually censored former President Trump. just because he had his voice on a show.
Yeah.
I think it was
Right.
actually
Right.
his daughter-in-law.
You're
That
right. You're
that
right.
is
I
crazy.
do remember that. Yeah, it was just like a week ago or so. Yeah. So, and just an example of how they slowly condition us to be accustomed to their ways, their tyranny, and to where everyone's just accepting of it, and it's a conditioning. Not to get too conspiratorial, but it really is. I mean, and we live in a world where conspiracies have become facts. I mean,
Well,
there's no other way to put it. We live in that type of world right now, and you just see that on the news. The police are at the church, and the pastor's like screaming at them and like, "Hey, get out of here! You guys are like, And I mean, I know the police were just doing their job. I don't know if they had this evil intention, but they got probably their orders from up above, but that's kind of where things are trending, and there's a large portion of the population that's okay with this.
now that we're kind of in this thread, you kind of remind me. So there is a graph out there. The guy who was talking about this recently is Tim Pool. I don't know if you're familiar with Tim Pool's work. He runs a podcast called Timcast IRL. I actually do recommend like people to watch that. But he calls this kind of era right now during the pandemic the greatest transfer of wealth from the working class, especially American working class, to the elites, so the top 1.1%. And he actually shows like the trends and the research of of how this has gone through, where a lot of people have lost so much of their jobs. And now, as you were talking about, like this global tax, I'm familiar with what's going on, like with the talks in Davos recently, where about this thing called the Great Reset. Are you familiar with that?
To a degree, yes, I am.
Yeah, they would say that. I think one of the most famous quotes that came out of this was, "You will own nothing and
Yeah,
you will be happy."
yeah. I just don't know what to think about this world we're living in, and I mean, I try not to be pessimistic. I mean, I started this interview off with a Tony Robbins quote. Like, I love, just being happy and loving and just wanting to give and just optimistic. And it's so powerful for who we are as a person, how we're going to wake up and show up to the things that we do in our life. But overall, we have an infestation that's very, very toxic for the long-term fundamentals. Like, I don't think we're going to have, I think our country's trending, and it's happening so quickly. It's not even in it happening over the course of 10 years now. It's happening quickly in the matter of months. And I mean, super fast. So yeah, we'll see. We'll see how
Well,
things look here. But one thing as far as preparing, you do what you can. You diversify, you spread out your funds, you have some cash, and you have some gold, you have some silver, have some at your home. Obviously, you should have some food storage. I think that's important too. I mean, we dealt with that big freeze here in Texas not too long ago. Everyone's going out and preparing a little bit. Obviously, what happened last year was a reminder with COVID to have some food supply and to watch the supply chain shut down. But just also know that there's going to be some casualties along the way. Like, you're not going to be able to perfectly optimize your finances in any situation. You may miss out on the upside. That's another thing that people don't consider. They're always looking to like preserve their downside. But going back to what we've seen in stocks and in real estate, a lot of people missed out on the upside, which is a loss too, right? Everyone's trying to protect themselves from a crash, but are you better off riding it all the way up and then if I and crash to where you would have bought it, or it crashes above where you would have bought it? You know what I mean? Does that make sense?
yeah.
Like, and so you have to just accept a certain amount of casualties along the way, on the upside and the downside, and be balanced in that approach.
The importance of keeping up our resilience in this time, our strengths are in encouraging ourselves not to fall into this trap, and just keep doing our research, keep learning every day. I think it's very important, and I know we've kind of gotten down a little bit more the political dark path, But I appreciate you coming here and giving us the encouragement. Because that's one of the things that one of the reasons I actually started this podcast is I want to connect people to something positive, people who are changing the world, changing the society, and giving that positive push. Because I come from the healthcare world and the political world, and both are to me are very negative worlds. I want to do something positive, and I appreciate you coming to my podcast today. Which reminds me, we're talking about a little bit about there's some losses and job losses on the way. And one of the things that actually that kind of struck me, I listened to one of your interviews of a couple of years back, and it kind of sparked a debate between our friends and me at the time, and that was regarding AI. Artificial intelligence, and I know you know a lot about this subject. And one of the things that I was concerned about is like, well, if AI is going to, take over a lot of the job industries, let's say trucking, for example. Well, what are we going to do with all these truckers? And say my friends who are also, and kind of we're bantering back and forth, kind of, and they throw back at me, oh, they got to learn how to do code and all these other things. Do you still hold the same opinion about artificial intelligence today as you did a couple of years ago?
Yeah, I mean, it's definitely it was kind of a media trend at the time, but so maybe it wasn't happening as quickly as it was all being hyped up in a way, but it's all happening. I mean, look at the cars we're driving. The cars are essentially driving themselves. The AlphaGo project where it can play the game Go, and there's more combinations of that than there are like tens of thousands of combinations, and it plays itself 10,000 times, and it's now beating the best, the most experienced human at that game. I mean, you have to think about the implications of that, what that's going to mean. And it's going to happen not because people want it to happen, it's going to happen out of competition. You're going to get uh, priced out if you're not using AI, if that makes sense. Like people using AI are going to be more competitive. They're going to do things cheaper. And so, sure, you can say, oh, I'm going to be the good Samaritan. I'm going to continue to hire truck drivers. But what happens when you're able to deliver? You're not going to be able to compete with somebody else who's saying, I'm having a robot drive everything for half the price. Well, that's going to put you out of business because you're going to stop getting hired, unless you have a real personalized niche. I mean, and there is going to be that as well. I mean, people are going to have boutique services and you interacting with a human, but that's what's going to it's going to cause things to get more competitive, and it's going to change that environment. But incorporating artificial intelligence into the world that we live in, I mean, that's going to be huge, and every business is different. I mean, it's not a one size fits all, but we're definitely going to see that. Technology has always revolutionized the way we do business, and those who refuse to acknowledge it will get left behind. I mean, it's the Netflix and the Blockbuster. It's technology. It's AI basically, I mean, on the computers that are delivering these movies to people. I mean, there's a degree of AI going on. Look at what's going on with Airbnb. They've turned just people's homes into hotel rooms, coordinating tens of thousands, hundreds of thousands of transactions every single day using artificial intelligence. And yeah, that's a problem for hotels. And, obviously we've seen what happened to taxis. They're really pissed off at what Uber has done to them with technology. And so if you fail to move forward with technology, you're going to get left behind unless you're the government and you just got an iron fist that you force your business, your 10-year-old outdated business plan on.
Well, it's kind of funny you said that because in that argument, I was a bit more on the conservative side of the argument, for the truck drivers, for the workers. But at the same time, I actually heavily invested in companies that heavily invested in their AI R&D, and that actually has been my biggest gains in the past year and a half. So just putting out there, there is something to that. But I think we're about getting to our close here. I do want to ask you one more question before we go, and I really thank you for coming today. I really appreciate you for taking your time. My last question here for you today: what is the most useful advice that's ever been given to you?
Mm, yeah. Well, it's a loaded, nuanced question, but I really think it has to be investing in yourself and me, and I know that's probably cliche, but it's amazing how so much of who we are comes out in how we do business, how we interact with people, how we show up. Um, I'm a you know, I love to golf. I love to play golf all, but I use that experience of being on the golf course, interacting with people, failing, being behind, having to compete, having to perform under pressure in front of people. Golf is one of those sports where, you can be when you're being watched. I mean, your whole swing, the smallest move of the needle causes you to hit a ball straight or 100 yards to the right, and it gets down into your nervous system. And so I learn a tremendous amount about myself, how I perform on the golf course. And it comes out in how I show up for business, how I show up for work, how I perform under pressure. And I can tell you, just investing in you and really not just investing, but self reflecting on how you are, how you're showing up each and every day is so powerful, and becoming a better you and providing more value. And um, I couldn't recommend it enough, and be more passionate about that.
Well, let's end it there. Mr. Kenneth Ameduri of CrusherStreet.com. Thank you very much for your time.
Thanks, Michael.